Just have 3 slides here to talk about what led to the price collapse and sort of why we continue to be in a low price environment. I know that the easy answer and the quick answer is supply-demand imbalance, but even though that's correct at 100,000 feet, that obviously is not very insightful. So hopefully these 3 slides will sort of set the stage, and then we can talk a little bit about what it means going forward. The first slide here, on the left, what you see here is, let me explain the data, and then I can talk to the tagline and the takeaways. On the left, what you see in the Q4 2012, the global liquids production was about 90.7 million barrels per day. Jump all the way to the right by Q2 2014, and reminder, that's right before we saw the price start to decline. We were producing about 92.5 million barrels a day. Now, the horizontal black line is consumption or global demand. And effectively, what we see is going from a slightly undersupplied situation to a slightly oversupplied situation. Again, for those of us who track the industry, that difference usually is handled by inventory, puts and takes. That alone would not have caused the crash. But more interestingly, if you look at the reconciliation in between those 2 points, what you see here is a continued explosion of North American tight oil, particularly from US, Canada, adding about 2.5 million barrels a day in this time frame. But Middle East, because of geopolitical strife, was actually mitigating a little bit of that overproduction, if you will. And so the expectation was twofold. One, we're not in the severe oversupply situation, even though some people were starting to worry that the geopolitical problems of the Middle East wouldn't last forever, and when they ended, what would happen to that negative 1 million barrels a day? How quickly would that be reversed? So we started seeing a little bit of concern even in the middle of 2014. Now on the right, what you see here is the demand forecast for 2015 by month in the back half of 2014. So for instance, in June of 2014, demand forecast for global liquids was about 94.2 million barrels a day. Now, if you look at what we were producing in the end of 2014 of 92.5, in other words, that growth rate would still be able to be absorbed by demand. We might be a little bit plus or minus that, but again, not enough there to worry too much, and that's why really we didn't see the price collapse sooner than we did. But by the end of the year, we started shaving off that demand forecast. And the details of that in big chunks are effectively that we started seeing the slowdown in China, and we started seeing new forecasts for China. They were no longer going to be growing at 9%, 10%, more like 7. Now it's 5, 4. It continues. We saw that people were expecting Europe to finally break out of its stagnation. That had not occurred at this time, and in fact, I think more and more people were believing that Europe was going to stay in a bit of a stagnated role. And then US was really the only engine humming. But again, we started seeing a confluence of events, which really was flipping to a little bit of oversupply, the threat of Middle East geopolitics stabilizing and therefore flipping what effectively was a headwind to a tailwind, and then the weakening supply demand. And that really is what precipitated the fall. Now, what has happened since? Let me break that into 2, I only have 2 slides left, into 2 different time frames. First, what happened since the previous slide, end of 2014 through, or middle of 2014 through the end of 2015, through the end of last year. Again, similar type of data. What we see here is beginning with the bar that we saw on the previous slide, middle 2014, slightly oversupplied situation. And you can see now jumping all the way to the right, we're now in a severe oversupply situation. 96 million barrels a day produced on average Q4 2015 compared to the 92.5 in Q2 2014. More importantly, what we see is exactly what the concern was. We see that Middle East, particularly Iran, Iraq, Libya, throw in there Saudi Arabia, producing more than 1.5 million barrels a day, exacerbating an oversupply situation. And even though North America now is not producing an increase as much, it's still adding 1.5 million barrels a day. So that combination really is what has helped sustain, if you will, the downturn. One other effect that weighs heavily, particularly on planning for what prices might be is shown here on the right. You look at the inventories. 2014 started out the year below the 5-year range. So the gray portion on the right-hand side of the slide is the 2009 to 2013 range of inventory for global inventories. Okay, 2014 started out below that. Remember, we had been running at a little bit of undersupply. It was being depleted, and then it started adding back as we started going into an oversupply situation. But still, by the end of 2014, as the data shows, we were back, if you will, within that range, albeit at the high end of that range. The fact that we produced so much more than was consumed since then is what led to this unprecedented growth in supply inventories, which is shown here by the red line on the right. And for those of you who remember or recall the constant inventory numbers, we started reaching literally numbers that were higher than any other numbers in recorded history for this commodity about May, June of that year. And the rest, as they say, is history. So huge amount of over inventory, or we call excess inventory, which obviously is putting a huge amount of pressure on the current price. Now, let me jump real quick then, last slide, before we open it back up to what all this means going forward. I think the tagline is accurate. I think we are starting to rebalance the physical markets. What we see here, again, looking at the data beginning with the Q4 2015 on the left, huge amount of oversupply. Again, that difference between the height of the red bar and the demand horizontal black line. And now we see, finally, we see a net decrease of contribution of production from North America, US, Canada, about evenly split, about 1 million barrels a day combined. But we see a continued amount of production increases from Iran, Iraq, Libya, and Saudi Arabia, while rest of world is actually net taking off about 500,000 barrels a day. Now, within that, there's an interesting story about what's happening with Russia. In fact, just this week, they came out and said that Russia now is producing more than any time post-Soviet Union collapse. And so there has been a huge surge in Russian production. And because of where they sit on the supply curve, that's putting a tremendous amount of additional pressure on the clearing price. The bottom line here is you see the three lines, 2014, 15, and 16 on the right with respect to inventory. We're still establishing new records, but they are growing at a slower rate, with the exception of last week, or the numbers that came out this week for last week, where we added 14 million barrels a day in the United States. It's the biggest increase in 35 years for a week increase in inventory. That, coupled to new information that OPEC may in fact not reach an agreement on freeze, is what has, again, caused a mini fluctuation down for the oil prices that just happened literally within the last week. Okay.
Great.
Oh, there we go.
Thanks, George. So